What a week, man. Honestly, what a week. Just straight down, pretty much. No
Yeah,
love,
no
no
love,
love,
no Momo
and
bounce.
no Momo bounce yet so far. And I think that we're just in a situation right now where the market is it's scared, but there's a lot of conflicting issues, I believe, at the moment. Like number one, right? We have this whole fiscal issue, but I wouldn't say the fiscal issue is so much to be such a driver here of this market drawdown. Like this idea of a slower of a spending slowdown, right? And the reason I'm saying that is number one, look at gold, right? If we just look at gold, what's gold doing? Well, gold's up quite a bit, right? So gold's defying the administration on their fiscal plans right now. It's saying like the odds of them achieving it are quite low. And you look at something like TLT, and that is just pretty much box bound, if you want to call it. It's stuck at Momo. It's trying. I give it props. It closed above Momo today, so it's obviously trying to get up there and flip the trend, but we just haven't been able to do that yet.
So is
And when we
it
look at
is it the deficit that's causing this discrepancy between gold and bonds? Or is there another
yeah,
factor in there as well?
I I think honestly, a lot of us have been thrown in a loop with gold specifically over the last couple of years. And at the beginning, the divergence was kind of hard to spot when it broke away from real yields, when the negative correlation, right? And I think that the propellant for this the last year and a half or so has been the fact that there's been an exponential acceleration in the deficit impacts in the market, right? Because obviously the deficit's always been there. Post COVID, it was pretty bad. It was almost like above five. It was in the 5% range at one point, but it's fallen since. That the negative 5%. So it's gotten worse since, right? So it hasn't really improved much since 2021. And I think that the issue now is that we're starting to see that the Fed is not going to bring rates to a pre 2018 level, pre COVID level, 2018 level, right? So if we look at the um the Fed funds rate and we take a look at where we are right now, like the 2018 2019 level was 2.43, right? 2.5 pretty much. We look at where the Fed was expected to cut in the last summer when we had that labor market slowdown. The Fed was pretty much priced to drop rates down to 2.8, something like that, right? Now we're not even seeing below 3.5 realistically.
What
3.5 is
needs to
pretty much.
happen for us to get back down to that level?
Well, I this is what I'm this ties kind of into gold, right? Because I think for the Fed to really cut interest rates, they need to see that they have a material slowdown in labor, or in real economic, basically a recession at this point. Either that or liquidity dries up and there's some type of financial stress. I don't think the Fed is going to just bring rates down gradually. I think that Powell's been pretty darn hawkish about that in the last, meeting and all of his public statements. And I think that that's pretty much where the market is kind of understanding the situation, which is what's propelling gold, right? Because the issue with the deficit isn't even the deficit in terms of discretionary spending, which obviously is a problem, but it's the fact that 50% of the deficit value is interest expense, right? So if the Fed isn't going to cut rates materially over the cycle, like we're looking here at a cycle, this is a cycle low over the next 2 years of 3.4 to 3.5%. If we're not even going to breach 3%, well, that interest is going to have to constantly be compounded, right? And that deficit's going to constantly be under pressure from high interest rates. And I think that gold is basically calling the administration's bluff. Do I think the administration can pull this off? Sure. Anything's possible, right? And I'm not here to say Powell can, or I mean, Trump can or can't do something. He's the president. I'm not the president. He can do whatever he wants, right? But it's pretty apparent that the market, if we look at gold and in perspective to TLT, right? This is not looking like something that is saying, "Oh, great. Yeah, the deficit is going to get fixed." I put this chart up on X today, but this is pretty much the chart. If you think Trump is going to fix the deficit, you're basically betting that the administration is going to put a ceiling in this ratio. Meaning, not saying gold needs to go down, but TLT will or bonds will substantially outperform gold in that scenario. That's where this ratio falls, right? Bonds outperforming gold.
Yeah.
But if you don't, then this ratio is going to go higher because the fiscal won't be fixed. And there's a typo here, but yeah, you get the point.
Yeah. Well, my concern
So
is like
ultimately,
we don't have a gold position in RQF. That's not part of RQF. And my concern is how long is this going to last, and like is it possible that the bond trade doesn't actually come because of this deficit issue?
well, I think that the way the administration is approaching this is quite interesting. Now, I do think for sustainability purposes of the model, we should at some point incorporate some sort of fiscal component in case one day fiscal actually does go to shit and you do have like a Venezuela, right? Like that we should have like some hedge in there in the system at some point. But I don't think you need it at the moment because the administration at least is very verbally committed at the moment, right? Again, these are the keywords at the moment. And we might have to take some emergency action at some point, but that's not we don't like price tails. We play them as the conditions rise to where they're material. So I think would look at this like you should look at this like this. There's obviously the possibility that the deficit just runs away and it just gets worse and worse and worse. And at that point, you're right. The bonds become an asymmetrical bet to the downside where the most bearish situation is a temporary relief valve, but then they shit the bed afterwards because that deficit just gets worse. Because in a recession, right, what happens is incomes get contract, so jobs retract, income taxes contract, right, and that deficit naturally expands, and the government has to basically boost the economy, and then you have the Fed coming out and buying that government debt that they're issuing, right, the excess debt, and I think that in a situation like that where you get a severe recession with a very deep deficit, it's only going to make that problem worse with more debt. The only upside to that situation is that rates would be lower for some time. So I think there's that release valve where bonds do work out to some degree. But in that situation that you're talking about, where they don't fix the fiscal, yeah, like there would be a point in time where it might be systematically beneficial to have some type of hedge in there. Something simple like, let's just say you're in risk off, right? And so traditionally in a risk off environment, um, where we're not in a slowdown, where growth impulses are negative enough to keep us into this deeper section, what you would do is you would just have a condition where you monitor both gold and bonds. If bonds are positive or bullish trend, you're going to stay long bonds. But if growth, if gold, excuse me, is positive and bonds are negative, meaning gold is bullish trend and bonds are bearish trend, you basically take the gold until the bonds become bullish trend. That's some condition we can add down the road, but I think it's a little late in the stage to try and mess with that. Would it, this is like backseat trading and it's very fitting the curve to modify the model just because gold has been doing so well. And I think that we will have to monitor the ratio, this simple ratio, to see the markets. This is like the best real-time indicator I can see at the moment to gauge the the market's expectations of fiscal performance from the government.
Yeah.
Because if they expect sustain a path of sustainability, this ratio will go down. This ratio will not go up if the government becomes more fiscally responsible. So this is like one of those like oh shit tests, right? Like we're at 3 right now. So if we go higher than this, then that's the market saying we don't buy it. If we go lower, and that's the market saying, okay, we're really taking what you guys are saying plus what you guys are doing, and results are proving that they're working.
Yeah. Well, how about we talk about where we see the market going now? So we we're in risk off, full blown risk off, not even a slowdown anymore.
I
In
hate risk off.
inflation just went neutral trend, so we're kind of on the way towards deflation. So
Yeah, we
what
are.
does that mean?
Yeah.
What does that mean for stocks? What does that mean for bonds? What are you thinking?
Well, I can tell you this much. For bonds, it's if you're a bond bull, or you're long bonds, we hope we can be long bonds soon. We really want to be, but if you are, the negative inflation impulses that we're seeing, so inflation going from that bullish to to neutral and then likely neutral to bearish, is what you want to see. You do want to see that with bonds. That's something that I think you need to see, because I think that's kind of what's been acting as a barrier in the process here and preventing them from going higher. I think it's simply put, Trump walked into office, right? And if, let's just look at this on a yield perspective because it's just easier. So Trump walked into office here, right? 20th. Yields have done pretty much nothing but go down since he came into office. And we've seen a lot of commentary from the administration about bond yields, interest rates. You know, in the State of the Union speech, Trump didn't really quote the stock market. He quoted bond yields, right? Besant's very vocal about bond yields. And I think that the administration is somewhat gung-ho on getting yields down. And the reason that they are, again, remember, 50% of that deficit value is interest expenses. If they were able to get the interest expenses down by half, they would reduce the deficit by 25%. Right? So it's lucrative for them to have lower interest rates. The problem is how do you warrant lower interest rates? Well, you're going to need to have some type of slowdown. And that's what I think the market initially got shocked on. We spoke about that earlier. It's not all deficit driven, right? Because we're at a stage now where, like you said, we're going to risk off. But this entire drawdown in the NASDAQ is not deficit related. Because if the market was so afraid of that negative deficit, remember that gold and TLT ratio we just looked at, right? The GLD to TLT ratio. This wouldn't be at highs if the market was really fearing that fiscal with the fiscal withdrawal of stimulus, the positive fiscal impulse coming to an end. This ratio would be lower.
Yeah.
So what that's telling me is like this is more than just deficit related. Now, likely, what this really what this initially stemmed from was the volatility around Trump and tariffs, throwing the market for a loop. That's, I think, the main driver for this at the moment. Like if Trump were to remove all tariffs, I would almost think that the market would be back to, QQQ would be back to 520, 525 pretty easily if all tariffs went off the table.
So
But
stocks don't care about the deficit.
they do. But what I'm trying to say is there hasn't been much progress on the deficit
So
because
it's just regular programming, go back to how it was because the deficit hasn't really changed.
right, exactly. I think well, this is a good take, right? Because like if you look at like gold to TLT right now, if this ratio falls down now, if this breaks down, stocks go even lower. Like if this falls apart now, what that tells me is okay, now the market's starting to really care about the deficit. Now the market's starting to say, oh shit, like the deficit impulse retractions are real. That walk back in deficit spending is actually going to happen. And that would probably hurt the market even more. Like the market's not down because of debt. Like, yeah, okay, they've been talking a lot, right? Like Elon's been chatting a lot, and like we need to cut the waste and abuse. So there's not like he's not doing the wrong things. The problem is like we're not seeing that in the bottom line yet. But I have a feeling we will see effects from Doge at some point. But the market isn't buying that they're substantial as of right now, which is why gold continues to run laps around bonds.
Yeah.
Right. So I think a lot of this is tariff related and it's a lot of uncertainty related. Like today was our, I believe, ninth day of VIX closing above 20. Right. So the market's off just back and forth. And what you could see here is NASDAQ is plus 56 basis points after hours here because odds of a government shutdown dropped quite a bit. this afternoon when Schumer came out and basically said that passing the stopgap bill would be wouldn't be as bad as shutting down the government. So what that's telling you is that there was also some issue today because the government shutdown would have happened the 14th Friday at midnight Eastern Standard Time. That's when the government would have had to shut down. So within a few hours from now. So if that gets cleared, right, which it looks like it's going to get cleared, the market's up on that, which is telling you that there was some sort of negative drag, at least in the last couple of sessions, on the idea that there was going to be a shutdown. And you saw that in bonds too, right? Like bonds did a huge pump today and kind of like into the morning gap down sideways into afternoon, but then a nice rally into the end of the day as well. I think that the bonds were maybe a little or rates were a little scared that we would go into a shutdown, which would again add further negative pressures to GDP. We didn't get the shutdown, or it doesn't look like we're going to. Bonds pulling back a little bit after hours on that as well, with stocks up. So something also to note here, NASDAQ was down today, bonds were up. That negative stock bond correlation, if we're for the bond guys and for us for the people like us that were interested in buying bonds, we have to pay attention to that. We have to, because I have a feeling that, look, again, like I said earlier, Trump walked in on the 20th. Rates have done nothing but go down. If for whatever reason, jobless claims today weren't too bad. I mean, there was some jump in the unemployment in the government claims, right, for government employees, but regular claims doing fine. So I have the feeling that at some point the market's going to want to at least test the waters. Doesn't have to do anything extreme. That the administration is really committed to lower interest rates. Because again, there was maybe one actual bounce. We saw upper vamp one time on the 10-year yield since Trump took office. One time. What happens if we go to 4.5 on the 10-year? How hawkish, or I should say, how restrictive is the administration going to get? What happens if we go to 4.75? Like, these are things in markets. Things aren't so linear. Pressure points get tested. I'm not saying we need to test them, but what would cause the market to go up? Well, lately we've been seeing this positive correlation with stocks, right? Like again, QQQ down today, bonds up. Now, it's not a very strong correlation. I don't want to say we're 1-to-1 right now, but I do think that the fade here in bonds has essentially, that correlation has been wearing off. But I do think that if NASDAQ puts in a bounce, right, in Qs, if we can get a bounce up to maybe mid vamp and then Momo, bonds go lower in that scenario. I think yields would take a hit, right? And maybe it's not a big hit, but if Qs go to Momo at 503, right? That's where we are at Momo. And let's just say TLT, something like, again, not 1-to-1 correlation. Maybe TLT goes down to 88, right? 88, 87. So not significant, but it starts moving in the wrong direction, right? That's going to be the tell. I think that's going to also be the tell for the deficit. If that happens, you're going to see administration talk, and that is going to be the sign if they're committed to lower bond yields or not. Because it's, you could say, oh, like a lot, X is blowing up with people saying the government wants a recession, they want to slow down, short-term pain, long-term gain, right? That's all over the internet. But that thesis hasn't been tested yet. The stock market's down.
Nothing has happened yet. Nothing significant, at least, that the market cares about.
The stock market's down, okay, but like bond yields are not down as much. Bond yields are back to December levels.
Yeah, bonds are not buying it.
Not fully yet, right? So maybe they start at some point here. Maybe maybe there's also a possibility that you got a lot of people trying to chase this dip, right? A lot of people don't have DDAP. They simply just have a chart like this and they're like, okay, we're getting stocks at a discount here. And this type of drop is pretty severe. I mean, we're talking about the worst decline speed-wise since 2022 at this point. So, like, there are some type of signals here. There's some signals here signaling that this could be getting overdone. And what happens is, like, people start jumping in on these momentum trades, and one of two things happen. It gets worse, or you have some type of reversion, right? the odds of this just pitter pattering around sideways and vol just collapsing without some significant move either way is kind of low. Typically, the way like you could see here, like these types of moves they snap back to where I don't know. We're not buying this dip, but I could see that a lot of people are just chasing this dip on the idea that Trump's going to fold, thinking like, okay, you know, just April 2nd comes around, he'll walk back tariffs, some other tariffs he put in place, he'll just keep walking them back. And I think that's probably where the risk is in the market right now, because quite frankly, nobody knows what is going to happen.
But
Everyone's just
if he walks back on tariffs, does that even make a difference? Like growth is so destroyed on our system. Like I don't know if that's even gonna bring growth back.
I think what happened is I'll tell you what happened with the system. The reason growth impulses are in the shitter is because of tariff impacts. And it's not just the surface level tariff impacts. It's also the second layer impacts of tariffs where you know, you have certain tariffs that you could understand on face value. Like for example, you want to tariff steel at 25% or whatnot, right? You want to put these tariffs on. You understand that the price of steel goes up, or you want to put an import tariff. You understand the price of imports go up, but it's also the uncertainty behind how those tariffs flow down the supply chain, which the market needs time to absorb. And I think our system saw this coming back in December as the market started front running inventories and trying to, that we were talking about inflation. We literally were talking about this a couple podcasts ago, right? Inflation, we saw this ramp from September to January on the back of Trump becoming president, and we know he's a tariff guy. Literally says his favorite word in the dictionary, one of his favorite words is tariffs. So like the market understood that. And we were talking about how a lot of this impulse here, this inflationary impulse, was just building up as much inventories as possible before tariffs were coming into play. And I think that negative pressure that this created across growth impulses was something that we picked up early on, which is why, in a way, we went risk off so early in December. On top of that, like some of this is going to be transitory, right? Now we have to eat through those inventories, and how we eat up inflation from there is going to be interesting. Like I think the market itself is just it has to absorb this information. So like what I was saying earlier, if you were to take tariffs completely off the table, I think that the market would be significantly higher, but I'll tell you why I don't think that's possible. That's going to happen. It could, but I think that Trump doesn't have many. When you're running fiscal at -7%, you have to create a slowdown somehow. And you can't really do that with the way the government's set up right now. You can cut expenses as much as you want, but you see that he's also trying to pass he's passing the tax cuts first to basically keep good on his promises, when in reality he should be balancing the budget then doing the tax cut. He should be doing it
Yeah,
backwards, but again, I'm not the president. That's him,
that
right?
doesn't make sense to me. I feel like
Yeah,
it's very counterintuitive to what he wants to do.
but I think he's just doing that for, you know, uh on his word type of thing, right? Which is fine, whatever. He promised it. He feels like he owes it. Whatever, let him do that, right? But I think that for him to create this this economic environment where he can get the refinancing costs of debt lower, his only real weapon in his eyes, if I was Donald right now, my only way to get rates lower is not call Jerome and yell at him, because guess what? When fiscal is -7 and you yell at the Fed to cut rates, you know what you're going to do? You're going to cause inflation. Right? So because like if you look at inflation, the Fed has done a phenomenal, like, yeah, we like to joke about them all the time, but like the Fed's done a phenomenal job keeping inflation 80 basis points up. The Fed's got inflation 80 basis points above target right now. Okay, you could use PCE if you want, but we'll just keep it a headline right now.
And they're doing
Roughly
that
1%
with a massive deficit too.
with a massive deficit, right? So Trump knows he can't just. I'm pretty sure someone's told him, or he's figured this out, that he can't just call Jerome and be like, "Yeah, listen, man, you got to cut these rates." He has to warrant an environment that they're going to cut interest rates. But how is he going to do that? Because he needs to slow the economy down to a point where the Fed needs to cut rates to stimulate it, because the deficit isn't doing it. right? And he also wants to cut all these expenses. So I think the way he's thinking about it is how can he get rates lower today? Because rate cuts, right? I mean, not rate cuts, spending cuts, they take time to go through. Like we're seeing now, look at the employee buyout program. Basically, if that gets fully passed, which I believe it is, that doesn't even take effect until the like September or basically the next fiscal year. Because everyone's getting paid out through the next 6 months or so, 5, 6 months. So those expenses are going to run the same, right? Yes, they'll be lower in the future, but if you want to get rates lower now, tariffs are the man's best friend. And I think that's what you're seeing. Like you're seeing a guy go buck wild on tariffs for that reason. Like if the administration is very confident that they're going to bring rates down, then they need to slow economic growth, which I think that the tariffs are the main, like I said earlier, the main driver for the lower equity prices that we're seeing.
Okay. You want to end it there? We're pushing 30 minutes now.
Yeah, okay. We could wrap it up there. Any questions though before we finish it up?
Yeah,
Is there
come
any
on, guys.
questions you
Ask
got?
some questions. There's no way you have no questions. There's no way. There's no stupid question. Don't be scared. Okay, we got 6 foot. What do you think about the theory that the tariff threat is just a ploy to get a new plaza type accord?
I mean, I think it's possible, but I think that Trump is at the end of the day, what Trump's trying to do is Trump knows that he put in these tax cuts, right? And he's trying to make up the savings later. And in one of his ways of doing this is going to use the tariffs. And also, Trump's Trump's a diehard American to some degree, right? Like he does, like in some weird way, the guy does believe that Canada belongs a part of America.
I
Like
mean, I
in
believe
some
that too a little bit.
yeah, yeah. No, but I'm just saying, like, if you think about it from his perspective, like he's gonna look at it from a deal perspective, right? And like we can argue about his business success, but he's gonna say, like, for example, Canada, I get to bring Canada into the United States, and in turn, I get access to all their resources. So I think that's something that like he sees as a way to like pressure Canada into pretty much joining America. Not that none of this is going to happen, but in that sense, that he's almost like he's a conqueror in some ways, right? Like I don't want to sound like he's some type of fascist, but or some type of you know, trot the globe and take over. There's some names that we could throw out there, but like to some degree, he's looking for economic benefits of both countries. Now, I don't think he's necessarily, like, to your question, trying to devalue the dollar, because if you really think about it, if he's going to balance the budget, if you balance the United States budget, the dollar will be the best asset in the world if you do that. Right? Like they're like the dollar will be dollar and treasury bonds will be the best asset, right? Because what's going to happen is stocks will be in the shitter, gold will be in the shitter, because why would you own gold when you can own dollar denominated debt? And Bitcoin, dude, I don't know what happens to Bitcoin if you balance the budget. I don't even want to know.
It's not going to be good.
It might be cooked. Okay. Like if that happens, and I don't know if Trump's just saying these things to say them. I don't know if he actually believes he can balance the budget. Again, I'm not the president. I'm not with him, but like, these are all things that you say when you want to be the number one. And I don't know if he's trying to manipulate other countries' currencies like that. I think he's more so trying to keep the dollar as strong as possible. Literally. And yeah, he's known to be a weak dollar policy guy at some point, right? But like his tariffs, they are going to keep the dollar strong. And if he actually fixes like just look at it like this, right? Right now the dollar, the DXY is at 103 and we're running a 7% deficit. What do you think happens to the dollar if we're running a 2.5% deficit? Where would the dollar be right now? I would say it would be significantly higher than this. Right? So I think that you have to some degree, look at the situation and say, okay, is Trump really playing like foreign games, or is he genuinely just trying to make the United like see, this is like the dilemma with politics is you don't really know what the person's thinking or what the person's doing until they do it. Like, is Trump just looking at the market and saying, I just want the United States to be number one? Or is he saying, okay, how can we break other nations?
Yeah. Well, I mean, Trump is known for playing 4D chess. He's pretty
Yeah.
switched on, so
Yeah.
I wouldn't put
I
it
know.
past him.
I know, but I think that it's just one of those things where, you know, you have to look at it from a broader perspective that in some ways it's a different Trump this time. It really is.
Oh
Like
yeah,
yeah,
totally
like you could
different.
just tell.
I
You
mean,
could just
okay,
totally tell. But
so here in Canada, people hate Trump, at least where I am. Everyone hates Trump. But this Trump 2.0, there are people in Canada that are like, you know what? He's kind of not a bad guy, which is unheard of when he was first president. Everyone hated him here in Canada. So definitely different.
I'm seeing a
Got
question here.
got another
6 foot
question. Yeah.
asking. Yeah. To be number one, he'll have to bring my yeah, like at some point, yes, he'll have to bring the manufacturing back and a lower dollar would help. But in his mind, right? Like if he keeps putting these tariffs on there, and as long as the United States is the best country in the world, I don't want to look. Other countries are great, but in terms of economic output, the issue is going to be how you're going to drop the dollar. How are you going to drop the dollar with keeping all these tariffs in place? Like I don't know. I don't even know if that's possible to do if you think about it, because like he's trying to basically onshore all this production. And yes, you're right to say with a lower dollar, it would incentivize more onshoring. But to weaken the dollar, you'd basically have to the Fed would basically have to increase the rate differentials, right? To weaken to lower the interest rates foreignly, locally, make them less competitive across the globe, and that would decrease the dollar, and other countries would have to keep rates higher. So basically, you would have to have this immense amount of American-based stimulus, right? While putting all these tariffs on, while doing all this things. So it's like kind of like a dilemma if you think about it. How does he get the dollar down to onshore this manufacturing and be number one, while also fixing that income problem? Because it's a 2D problem this guy has here, right? He wants to bring revenues up on the national level to offset those income taxes, but he also wants to onshore all this manufacturing. And how is he going to do that if he keeps these tariffs so high? And I think that's like the battle that at some point is going to have to play out here, because you know this is a good point that you bring up, though, the questions that you're saying, because like you also have to understand, will companies just eat these tariffs, right? Because like if you're a company that plans and manufactures over decades, not over years, right? You're a very you're very well thought out and successful company. The odds of any administration after Trump reversing a lot of this is extremely high. Like at the next election, if you got another Republican walk into office, the odds of them reversing a lot of this is quite high, right? So do these companies take it on the chin for the next 4 years and figure it out thereafter? Or are they going to really reroute their entire manufacturing process back to the United States?
That's a good
Like,
point. It's a very good
like
point.
would it? would it make sense for, um, then this comes down to the tariff levels, right? Like, if the tariff levels are obscene, maybe they have to some degree. But like, let's just say you're importing cars, right? Um, I believe BMW already came out and said for the Model 3s made in Mexico, they'll eat the tariff hit, from what I saw. So like, the question is can these companies afford to eat the losses from the tariffs and keep the production offshore? And can they keep that up for 4 years? And then will another administration revert these negative consequences and kind of fix the whole playing field for them? And I think that's like, maybe that's why we haven't seen so much reaction in the market, because again, if you're going to onshore, like you said, like bring manufacturing back, you're going to need a lower dollar. And you're going to also need to have significant capex within America, right? And this is going to hurt multiples. Stocks would go down more, I think, in that scenario. So maybe we're still in the early phases of the market trying to figure out, like, hey, listen, like, we're going to keep this go. We're gonna play ball with Trump, and we're just gonna try and bring, for example, Apple committing to $500 billion in the United States, right? Like, how much of that actually gets done? Yes, it's a good headline, but how much of that $500 billion is actually done? Nobody can give you that answer, right? Because we don't know. It's kind of like the the Taiwan semi deal with Trump. That was partly done with Biden last year. I think it was only 60 billion, and Trump got it up to 100 billion. But like, still, that needs to get done, right? These things need to happen. Saying them is good, but they need to get built, and that capex is that's going to hurt some of these companies, depending on what company they are. But
Yeah. That seems like
I
really
think,
the name of the game with this Trump administration is it needs to get done. Like there's been a lot of promises, but it needs to get done. Like that's what bonds are waiting for in terms of the deficit. It needs to get done. And nothing has really been getting done so far. Like there's the Doge cuts in terms of the deficit, but it's so minute compared to what actually needs to happen.